Hi, I'm David Huff here with DW Huff Consulting, and welcome to the March 24th, 2023 edition of News from the Front Lines of Business. We try to help you know your numbers so that you can grow your numbers. Another week behind us here, and there's kind of a picture. I realized I didn't comb my hair, but this morning. Well, anyway, here we go. It's tax season, so what you're going to do? It's very hectic. But a couple things that I think will be useful to everybody that we've as we talking to people and having discussions, we find a lot of things that we think will help you grow your money and your net worth and everything. So it's a little bit more emphasis on that. I gotta just take a break from thinking about taxes for a minute here. But this is one ad. So it's employee retention tax credit. So we talk about that a lot for our business owners, and it's a credit, and it's based on payroll that you paid in 20 and 21. It's a COVID-related, stimulus benefit, basically. And we're hearing lots of advertisements in the radio, television, etc., email, blasts, and everything. But the scammers are getting pretty slick now. So this is a copy of a letter. I've seen this on 2 different clients, and it comes like in a retention credit department. Very official-looking notice here. You'll notice that the fonts and the layouts are very similar to certain types of IRS notices, whether it's a refund or a balance. So it looks, in the same format. And it's got a Washington D.C. area code as far as the callback number. So it's very slick. And somehow in this case here, they got the number of employees right. So I don't know what database, the scammers are pulling from, but they have just enough credible information. They display just enough credible information so that it would appear that it is coming from somebody who knows something about the business and that this credit amount could be true. So in the case of these couple clients, it's actually substantially lower than what they have here, but it's a great advertisement gimmick, and it's kind of scary here how much information these marketing people can find and make it look good. So be careful if you're a small business owner. Reach out to somebody who knows what they're doing, so you don't get taken in and possibly taken advantage of. Because we've seen a lot of the upfront payments. So they'll calculate, like in a case that we just saw a minute ago, with that $300,000 credit. They'll calculate a balance that you expected to receive, give you a very official-looking calculation. 25-30% of that number they're going to ask for upfront as a fee. And with these companies here, you don't know, it's going to probably get audited and scrutinized at some point. We expect that the IRS is going to be looking at these things a bit closer. So who's going to defend you? 3 years down the line, the refund check's been cashed and spent, and the way these things tend to work out is that they don't follow up with you and audit things too substantially after the refund has been received. So now you got a big problem on your hands. You paid this company some upfront fee. Your calculation may or may not be correct, but you need to find somebody now to defend you, because a lot of these companies aren't going to be around next year. So be careful. It's too good to be true. It might be, but talk to somebody who understands how it works before you do anything. All right, so personal financial planning. So we talk a lot about passive income and investing. And I just saw this article here, and it's Charlie Munger. So he's of Berkshire Hathaway fame. Friends with Warren Buffett, a co-investor in a lot of deals. A lot of stuff they say isn't relevant, I guess, to the individual investor, but this particular thing he said is. And he's talking about getting to your first $100,000, and said that's it's hard to do, it's crucial. And it's not, he considers it a magic milestone, and I tend to agree, because what I'm finding is that when you focus on some target, so as opposed to just kind of saying, I'm going to pay my bills, take my leftover money, invest it in my Roth IRA, my brokerage account, and whatever that number is, it is. The difference between that outlook and saying, I got to get $100,000 in my brokerage account. I'm this is what I'm trying to do. Having that goal and having something to shoot for, it changes your outlook and your perception and your priorities. So what you start finding is that when you have a little bit of extra money, and you may have, prior to adopting this mindset, may have spent it on something that you didn't really need. By focusing on getting you up to that $100,000, that mindset change is more important, I think, than any investment return you got. So in this slide here, they show you, even going back then, you let it go for 21 years and you invested at some kind of conservative rate here at the time. I think they used the 5% compounding rate here. So 21 years, the 100,000 gets you to 278,596. Great return. That's substantially more money. But that is not as important. If you got only 4% or if you got 6%, the amount wouldn't be that different. But the fact that you did something to get that $250,000+ million accessible to you is way more important. So those actions that you take are way more important than the results in changing things. So if you wouldn't have put the $100,000 in, you'd have nothing in 21 years. So I really like that, and I think that the importance of $100,000. I think even today, even though it's 20-something years later, that's still a good thing to shoot for. Just because of the change in mindset. In our Infinity investing system that we are kind of implementing here, where you're trying to develop some sustainable, long-term passive income that you don't have to do anything to earn. The 100,000 mark is really where we start jumping off from some basic dividend-paying exchange mutual funds and publicly traded real estate. We start moving into some of the more complicated investment choices. So that's still a good benchmark is what we see here. So change your mindset, get your $100,000 in the bank, and you'll be good. So the Infinity income. So we have touched on this briefly, but I guess it's worth mentioning again that what your Infinity income is, it's not like your job. So if you don't go to work next week, chances are pretty good you're not getting paid, right? Your Infinity income is stuff that's going to go on regardless of what you do. So it's going to be your dividend-paying stocks. If you have real estate investments, the rent's going to come in, based on obviously the occupancy of the unit, but the rent's going to keep coming in pretty much regardless of what's going on in the world. So that's what we're trying to build up. So we have a methodical way to kind of do that, where you're not getting too far ahead. We find some people get a little ahead of themselves, maybe with the more aggressive investments, and we like to build a base first. But still, Infinity income is the kind of the recurring income that we know we don't have to do anything for, and that's the money that we want to use to really purchase other things. So as we save in money, I guess we want to focus on putting money into the Infinity income account by taking what we earn, investing it, and then letting that income that gets generated from the investments do other things, like maybe upgrade your car, or do a kitchen improvement in your house, or all that kind of stuff. So the Infinity, the income that won't stop is what we want to use to buy these things. So we controlling our spending by doing that, as well as just focusing on don't buy anything if you can't pay for it with money that you don't have to earn. All right. So it's tax season. We're still kind of rock and rolling here. But my closing thought is, I guess I was in a crappy mood yesterday. I'm out in traffic. I may or may not have flipped somebody off at a certain intersection, and I don't know. This just popped up on one of my Facebook feeds today, and it's a reminder. Be nicer than necessary to everyone you meet. Everyone is fighting some kind of battle. So that person who was driving kind of aggressively, I guess, it made me mad, cut me off, and I probably should have not reacted the way I did. So with that, be nice, enjoy your weekend, and we'll see you out here next week.